If you're a lazy person, just like me, you rarely, if ever, withdraw cash at an ATM, and you do most of your transactions with a credit card, which means that your wallet is most of the time completely empty. Which can lead to very pleasant situations, just like when you eat in a restaurant and then you find out that they don't accept the credit card, so you have to drive for 20 minutes to the next ATM, and then you have to come back and pay those guys in cash, and all of that while you're being late for an appointment. Sorry, I am now calm and relaxed again. But listen to this. What if I told you that cash could actually completely disappear and be replaced by a cryptocurrency issued by the government? I'm asking you this because it could very well become a reality in the next 5 to 10 years. Actually, governments are already making projects right now to issue their own currency, like the US dollar, the Swiss franc, etc., as a cryptocurrency issued directly by the central bank. Don't you think it would be a huge revolution? Well, yes, it would be a huge revolution, and such a revolution would have a lot of consequences on our societies, both good and bad. That revolution could lift millions or even billions of people out of poverty, but that revolution could also completely crush our current banking system. Central bank digital currencies, or CBDCs, could also mean a lot of trouble for the so popular cryptocurrency, Bitcoin. But wait a minute, that's a lot of information in just a few seconds. Let's take a step back and start from the beginning. Let's see what are CBDCs, how they work, and what could be the consequences of adopting CBDCs. Let's dive in. But before we get started, please hit the subscribe button down there and activate the notification bell to never miss a new video. Let us start from the beginning. What are CBDCs? CBDC stands for Central Bank Digital Currency. They are the digital version of the money we use every day, such as the US dollar, the Canadian dollar, the euro, etc. The idea of CBDCs has greatly been inspired by Bitcoin, which created the idea of a cashless society. And normally, CBDCs will also run on a blockchain protocol. The main difference between CBDCs and Bitcoin is that CBDCs are backed by the central bank and its assets. In other words, CBDCs are issued by the government, and they are exactly like the normal money we use today, the US dollar and so on, but on a blockchain network. They are the digital version of the normal money on the blockchain. There would be quite a few advantages of using CBDCs over cryptocurrencies like Bitcoin. The main advantage is that since CBDCs are normal money issued by the government, they will be accepted everywhere. It will be accepted in any restaurant, in any shop, in any bank, to buy a car. In other words, it will be accepted everywhere. And the other advantage is that since CBDCs are controlled and issued by the central bank, the supply of CBDCs can change in order for the value of CBDCs to be as stable as possible, unlike the other cryptocurrencies that are very volatile and thus not really usable as a means of exchange. So now you know what CBDCs are, a digital version of the normal money we all use today. Now let's see a bit more how it works. Nowadays, we all use fiat money, which is the normal money if you prefer. And with fiat money, commercial banks play a huge role as intermediaries. Let me show you all of that in a simplified model. The central bank of a country issues physical money in the form of banknotes and coins. With that physical money, central bank purchases assets from commercial banks, such as gold, silver, shares of companies, bonds, foreign currencies, etc. Then, commercial banks mostly keep that physical money in their vaults, and they lend it to the general population via loans and mortgages. But they don't lend the physical money, they just credit the accounts of their customers. In other words, commercial banks create money out of thin air just to credit your account. This intangible money is called scriptural money. As a result, there is much more scriptural money than there is physical money. So that is, in essence, the whole journey of money. How money comes out from the central bank all the way to your bank account. And as you can imagine, all of that was a simplified model, and I know I went pretty fast. So if you want to know more about the banking system and how it works, I suggest to you that you check out this video that I made where I go much more into detail about the whole banking system. Now, let's go back to our simplified model. What happens nowadays is that this whole process is pretty long and incurs quite a few costs. Of course, the commercial banks don't do all of that for free. They actually make a lot of money in those transactions. It means also that there are high transaction costs that us, the population, have to pay. And the other problem is that many people are excluded from the banking system because they just don't have enough money to create a bank account, or they live in remote areas where banks are pretty rare. To give you an idea, it is estimated that 18% of the US population does not have access to financial services, which is just huge. We're talking about tens of millions of people. And those people depend on very expensive alternatives, such as payday loans. And, as you can imagine, the situation is even worse for people living in developing countries, where the vast majority of the population is unbanked. With CBDCs, it would be radically different. In that case, commercial banks as intermediaries would not be needed anymore. Central banks would issue its digital currency and send it directly to the population. The only thing that somebody needs to receive that money is a smartphone, a computer, or an electronic device built for that purpose. On this device, the money would be sent to a digital wallet. And then, the central bank could give directly financial services to the population by lending them money directly through loans and mortgages, without going through a commercial bank and their hefty fees. That would be just awesome. Absolutely everybody in developing countries could be included in this new financial system. And in developing countries, it would be the same thing. Millions and millions of people would have access to financial services for the first time in their lives, and they could borrow money for further education or to open a business or for many other things. And for people who already have access to financial services, well, it wouldn't change that much. It would just be much, much cheaper. That is the fundamental advantage of CBDCs, completely bypassing commercial banks to provide financial services. But there is one problem, because this advantage is actually a double-edged sword, because this advantage can also turn into a disadvantage. It could be a disadvantage, particularly in developed countries. For example, here, where I live in Switzerland, if suddenly they issued a CBDC, everybody would take back the money they have as deposits in the commercial banks, right? It would make no sense. Why would you leave your money in a commercial bank that you have to pay really big fees, where you can have it for free basically with CBDCs, right? If everybody withdrew the money they have in deposits, all the commercial banks would immediately go bankrupt, and it would be a huge financial crisis. There would be no more company around to provide mortgages and loans if a CBDC was launched suddenly, because a period of transition is needed. The Swiss central bank doesn't have the tools or the expertise to start delivering financial services just like that, like commercial banks. If commercial banks suddenly disappeared, businesses would have no more financing, and as a result, production would plummet and unemployment would skyrocket. Commercial banks are absolutely crucial because they provide liquidity to businesses and individuals when they don't have enough money. I know that banks don't have a very good reputation because they have a long history of mistakes, dishonesty, and they are seen to be responsible for big crises, and therefore a lot of people would think that we would be better off without banks. But believe me, if banks suddenly disappeared, you would miss them very quickly. Another drawback of CBDCs is the potential lack of privacy. Now, I'm not going to dive too deep into technical stuff, but to make it simple, there are two ways to issue CBDCs. There is the token structure and the account structure. A token structure uses, well, a token. It's like a digital coin to make the transaction between the payer and the payee. A token structure is just like the cash we use today. You know, well, the cash we use today is a token. It's something you use to make the transaction between the payer and the payee. In the case of a token structure, there will be no privacy issue. The identity of the payer and the payee will be protected. There will be no way for the central bank or another authority to know who was involved in the transaction. It's exactly like a cash payment today. When you do a cash payment today, the transaction of both people involved is never revealed. In an account structure, on the other hand, it's very different. In that case, there is no token that moves from one individual to another. The digital money simply goes from one account to the other. To give you an analogy, it is the same as if you send money to your friend via e-banking. You don't use any token in that exchange, the money simply goes from the payer's account to the payee's account. It's pretty much the same with an account structure. The digital money moves from one account to the other directly. This method is simple and reliable, but it has a huge disadvantage, and it is that the identity of the payer and the payee is revealed. It means that the central bank will be able to monitor all the transactions of each individual and intervene, which causes obvious privacy issues and potentially abuse by the authorities. And as you can imagine, the problem is even worse in dictatorships, where the government would be able to disable any person to conduct any transaction, which is the equivalent of signing their death sentence. The local dictator could use CBDCs as a weapon against anybody who disagrees with them. And it's funny when you see that China has already announced they will launch a CBDC with an account structure. What a coincidence! We wonder why. Another drawback of CBDCs is that they are completely dependent on electricity. If for some reason there is an electricity shortage because of a war or an energy crisis, well, no more CBDCs, no more transactions are possible, which is a bit problematic, as you can imagine. But okay, all of that goes to say that CBDCs can bring massive advantages and lift millions of people out of poverty. But they also represent a few threats, in particular in developed countries where it could completely crush the banking system. And that might be the reason why the pioneers of CBDCs may actually be developing countries. Actually, the first country to ever launch a CBDC was the Bahamas, with the sand dollar in 2020, with the objective of increasing financial inclusion and offer more opportunities to the less fortunate. And so far, the feedback has been very positive, and the Bahamas are being a role model for other countries in terms of CBDCs. The Bahamas was closely followed by Jamaica, and so far they are the only two countries who have launched full-blown CBDCs. Nigeria, Ghana, and Uruguay are also well advanced in launching their own CBDCs. In developed countries such as North America and Europe, the whole process might be a little bit slower, and we might need a little bit more patience, because as I said earlier, a full-blown adoption, a brutal adoption of CBDCs might cause a huge financial crisis. So that is why in North America and Europe, they're kind of studying a hybrid model to adopt CBDCs, but by keeping commercial banks into the loop, by keeping them into the game, if you will. So yes, if you're watching this in a developed country, you might have to wait around 10 years to see your own CBDC. And by the way, a few years ago, around 6 or 7 years ago, Finland was one of the most advanced countries in terms of CBDCs, and they were about to launch their own CBDC very soon. But when they made a deeper study of the impact of a full-blown CBDC, they saw the massive financial disruption it could be and the massive financial crisis it could create, so they decided to drop the project for the moment. So that again goes to show you that CBDCs will probably develop first in developing countries and then later arrive to developed countries. Now, I know some of you have been waiting for this part of the video all along. What will be the impact of CBDCs on Bitcoin? Will it be a positive or a negative impact? And also, when I'm talking about Bitcoin, I'm talking about all private cryptocurrencies in general. So that includes Bitcoin, Ether, Dogecoin, Shiba Inu coin, or whatever that may be. Bitcoin has been very popular those years because it has been presented to us, the general public, as an alternative to normal money or fiat money like the US dollar or the Swiss franc. It has been presented to us as being the money of the future. Bitcoin has for sure a few advantages, namely the fact of being able to conduct any transaction with anybody in the world almost for free, without going through this whole and very long process of the banking system that is very long, inefficient, and expensive. But here's the thing, if CBDCs appeared, Bitcoin wouldn't make any sense anymore. Because CBDCs have almost all the advantages of Bitcoin without the disadvantages of Bitcoin. Namely the fact that Bitcoin is extremely volatile and makes it very difficult to use as a means of exchange. I mean, I ask almost everybody I know if they would accept to receive their salary in Bitcoin, and everybody said no, because it's too volatile. You don't want the money in your wallet to potentially lose 10% of its value tomorrow, right? And another very big disadvantage of Bitcoin is that not everybody accepts to be paid in Bitcoin. I mean, you cannot walk in any place and pay in Bitcoin. Most people would say no and would refuse. And also the problem that people do not agree on the value of Bitcoin. Some people say that Bitcoin is worth millions of dollars and other people think it's completely worthless, which makes transactions even more difficult. What I mean with all of that is that CBDCs offer all the advantages of Bitcoin, but without all those disadvantages I just mentioned. Because CBDCs are simply issued by a government that people somehow trust. Because everybody accepts to be paid in a local currency and people more or less agree on the value of that currency. And all of that happens because of trust and credibility, because if you want to issue a type of money, a type of currency, trust and credibility are absolutely crucial. I mean, with CBDCs, there is trust and credibility because it is issued by a government, it is backed up by the assets of a central bank, whereas with Bitcoin, it's pretty much out of thin air, there's nothing behind it. For all those reasons, I think that when CBDCs will come around, Bitcoin and other private cryptocurrencies will lose pretty much of its attractiveness. And another issue with Bitcoin is that I think when CBDCs will become mainstream, Bitcoin and other private cryptocurrencies will be considered as counterfeit money and probably prohibited and banned in many countries, as it is pretty much already prohibited in China and Russia. The only disadvantage I see of CBDCs compared to Bitcoin is the potential lack of privacy of CBDCs, in particular, as I said earlier in the video, if it is an account structure. But I have already talked enough in this video, and now I'm curious to know your opinion about all of this. What do you think about CBDCs? Do you think CBDCs would make our society better? Would you like your country to launch a CBDC? Let me know in the comment section below. And as always, I hope you liked this video. If that is the case, a little thumbs up is always appreciated. I would really like it, and I would be very grateful if you share this video with your friends, if you think they would be interested by such a topic. And also, don't forget to subscribe to my channel if you haven't done so already. And one last thing before you go, I think you'll be very interested by this video. Today, we talked a lot about the future of money. This video talks about the past and the history of money, and I really go into detail. So, all of that being said, I wish you a nice day, and I will see you soon.